I'm Charlotte McLeod with investingnews.com, and here today with me is John Feneck, Portfolio Manager and Consultant at Feneck Consulting. Really good to have you here once again.
Thanks, Charlotte. Always great to be here.
Of course, great to be catching up with you as well. And we'll start with gold as we usually do. Our last check-in was just about 2 months ago, and we were talking about whether gold needed to take a breather at that time. I think we'd seen it go all the way up to 3,500. It had pulled back. So let's get your thoughts on gold right now, where we're going in the summer and perhaps to the end of the year if you want to go there.
Yeah, I think we mentioned that my gold target had been hit this year, and our new target was 3,500 for sometime before September. We literally bounced right off of 3,500, right? I mean, some of this is guessing at this point, let's be honest. I mean, anyone who says they have a crystal ball and can accurately predict the price, we were lucky enough to be $8 off last year. This year, we've been pretty accurate. We like to tell people like it is, Charlotte. We don't like to say $10,000 gold. People are confused by that. Maybe we hit that in our lifetime, but that's a huge move from here, obviously. So we try to keep people engaged and focused on what reality is within the last, couple of months or the future couple of months, because I think that helps people stay invested, right? For example, we'll talk about silver today. Silver's our biggest holding. It's been our biggest holding for many quarters now. But you didn't hear me talking it up last year. In fact, you heard me saying on your show many times we would not crack 30, which we didn't. So it's not like we didn't want silver to do well. It's not like we didn't think it would do well eventually, but it wasn't doing well then. So we're just telling people what we see. So what we see right now in gold is a trending pattern, right? We're not breaking 3,100 to the downside. We're not cracking 3,500 to the upside. So we're in this range, if you will, not a negative thing. This is a really positive thing, and here's why. When you look at the gold producers, meaning the big boys, Newmont, Agnico, Barrick, other companies that benefit from this, like Franco-Nevada, Wheaton, WPM, all these companies are in GDX, right? In a big way, big percentages of the ETF. GDX had a 53% first half of this year through June 30. Really good performance, right? So I think there's a misunderstanding when you talk to people at conferences like, wow, I wish the miners would catch up. They have caught up. It's a matter of you doing your research and your homework as an investor and making sure you're invested in the right ones. That's why you have to work with professionals. You can't just do this on your own. And sometimes you can get lucky, but on a year in, year out basis, it's very hard. So we encourage people to go to our website, fenneckconsulting.com/performance. We just posted our first half. We were up 61.1, so about 7.5% ahead of GDX this year. But, on an average annual basis, we're beating something like GDX or GDXJ because we're active managers and we're looking at things constantly and saying, okay, if Barrick and Agnico are in the top 2 or top 3 holdings of GDX, should we put an equal weight on each? And the answer has been no for us. We've had almost a 2% weight on Agnico AEM and less than 0.2% in Barrick B, because the chart is telling you this, right? Agnico's chart looks like this, and Barrick's chart looks like this. So they're trying to do the same thing, but they're performing differently. So we've been saying this on your show a lot: is that you can't take a shotgun approach to this yet. We're getting closer. We're getting closer to this is just a rally and put your money into whatever. Right now in gold and silver stocks, but we're not there yet. We want to see silver break out to certain levels. We'll talk about that in a minute. But why this is important for the trend of the gold price is earnings. Earnings are coming up for all the names I just mentioned here in August, right? So you want to watch for good quarters from these companies, and I think you're going to see that. The free cash flow that the companies I just mentioned could put up is going to be astronomical because this is the highest gold price that any of them have ever seen ever, So I think they're going to take Wall Street by surprise. Perfect timing, by the way, because, the broad market tends to sell off in September, October, as you know, worst 2 months for things like the NASDAQ and the S&P going back to 1929, historically, so I think we could see a sector rotation away from momentum, away from tech, away from, everything that's AI and everything that seems like casino-esque into things that are sort of boring, like, Barrick, Agnico, Newmont, that are just cranking here on free cash flow, and will turn some heads, I think, as the coming quarters unfold.
Well, that would be very significant and certainly gives us something to watch for in the next couple of months. We will get over to silver because, of course, that's a very important topic right now. But before we go there, maybe if we could take a little bit more of a look at your gold strategy right now. I know you usually share with us some updates on companies in that sector that you're following.
Yeah, sure. So one that's been interesting for us I met Fraser probably 2.5 years ago at Denver Gold. This is Mandalay Resources, MNDJF in the States. At the time, the stock was about $1.20, $1.30, but the balance sheet even back then was pretty decent. They never leveraged themselves like a lot of gold companies do, Charlotte, where they take on a ton of debt. And as an investor, you have to be wary of that, because if you're not producing, or if something goes wrong along the way, like you've seen with Barrick, right, with their troubles in Mali, that's about 15 to 20% of their revs. So, if they weren't a big enough company to overcome that, and they had a serious amount of debt on the books, that would be a problem for a company like that. Thankfully, they have other things going on that are positive. But Mandalay's just put out news a few weeks ago, $101 million in cash and no debt. Like, amazing balance sheet. They're merging with an Aussie company called Alkane, and the arbitrage that's being played out right now is kind of weird. Mandalay's gone from around $4 down to $3.32 US, and I can understand a decline when you see a merger happening between two companies. It's not unusual until the merger is consummated, which, by the way, should be first, second week of August if things go well. But this is sort of extreme. I mean, when you have a balance sheet as good as Mandalay's, why would people be shorting this? I don't know. But the short interest is up significantly in Mandalay over the last couple of weeks. If people, care to take a look, we love seeing that, because people, I don't know why people do this, but they do it. And when you're in a bull market for gold, that takes some guts. Like, I wouldn't be shorting anything gold related right now unless there was, a material reason in the news to do so. So we, have a position on Mandalay that we're going to start growing here, because we think the deal will go through in August. And then you've got other things to look forward to, such as Alkane is already in GDXJ as a holding. So when the merger happens, that entity most likely will get some additional fund flow, right? Because of now being a merged entity within that same ETF. So that's happening September 19th, if I'm not mistaken. So, we like near-term catalysts in everything we do, as you know. We don't like to wait 2 years for something. This is a near-term situation. So the other thing we like about Mandalay, I should say, because a lot of your followers and listeners like my critical mineral comments, they have a huge position in antimony. And antimony is a critical mineral that's getting a lot more attention these days. Antimony, they're the largest North American antimony producer, and they don't talk about it as much as some other companies do that have, 1/5 or 1/10 of the size of the antimony that they have. So I think that's going to help revenue as they move forward. So moving on, maybe to like one other name in gold. Let's see. There's so many. Gosh, it's there's so many in my head right now. I just got done looking at the screen here with the market closing. I think you could look at Denarius Metals as a gold and silver play. That one is DNRSF in the States, DMET in Canada. I met with the chairman there, Serafino, just recently, and Serafino's got a lot of skin in the game. I love to see that. Probably 22 to 30% of the float is his, like unbelievably large position. They just went into production in Colombia. The stock's at 34 cents US right now. They did a life financing. And when you do one of those financings, Charlotte, you have the ability as a buyer of that financing to sell shares right away, which puts pressure on a stock when you see that type of financing sometimes. And I think they had some people that they brought in that may have said, "Hey, we're going to hold the shares long," but they're not. They're just selling the shares and they're keeping the warrant, right? We don't do that. To each his own, but I mean, at a 34 cents US, I mean, the stock was trading in the 50s US right before they went into production. So now you're getting a company who is in gold and silver production in a good jurisdiction in Colombia that the company really understands, because both the CEO and the CFO used to work at ARIS, ARMN, which is adjacent to their property. So these guys have a really good understanding of the deposit, and they've got other things they can pivot into. They've got 2 projects in Spain that they're developing that aren't, years away from production. They're in the next couple of years. So we like companies like that, Charlotte, that go from exploration to development to production very quickly, with low capex and just trading it, under a 40 RSI right now.
Really good updates on the gold side. So thank you for that. And we'll leave gold there for now, because as we said, there's so much going on in silver right now. So we have to move over and talk about that. So during our last conversation, which again was about 2 months ago, we were talking about silver, and you mentioned 35 was that major resistance level, but you thought we could get through that, maybe even get up to 37 this year. And of course, both of those things have now happened. So want to get your updated thoughts on the price. Where do we go from here?
Yeah. So silver, as I mentioned, was our largest holding last year. It's our largest holding this year. It's 10% of our portfolio on the nose. That's physical silver and related things like a Sprott ETF or SLB or something. So the reason is because the gold to silver ratio has been so stretched. I mean, when you see gold to silver ratio of 100 plus or 90 plus even, it's like, man, silver is just going to catch up here. That was our thesis. It's not that gold's going to tank and then that ratio will narrow. So gold is trending and silver is running, and that's beautiful. And so that ratio is dropping, which is great. But 35, yes, that was a big line in the sand. Technically, we got through that. And what's interesting to me more than anything is that we haven't retraced below that since the breakout, which is huge if you're a technician, right? Like, you're not even seeing 1 to 2 days in a row of under 35 silver. Now, what's happened is we broke through that 37 to 37.30 resistance level after failing there, by the way, which is also a technical bullish sign. And then we rallied all the way into the 39s, but we hit resistance, between 39 and 40, which is not really unexpected, because it was a really quick move from 37 to 39. I think 40 is sort of like, again, a big round number that doesn't have a lot of resistance on the long-term chart, but it's still there in people's minds, and it's going to take a little bit to get through 40. But once you're by 40, then it's like absolutely go time if you don't think it is already. 40 to 50 is only happened twice in history, right? Going back to 1980, and that's going to happen again. I mean, we're going to break 40. That was our big target for this year, was 40. I'm just happy that we're conservative and we hung in there. We haven't sold an ounce. We basically just held tight with both hands. I've been calling some coin dealers. Some are really showing signs of very low inventory already. And that isn't unexpected by me, because when I went out in 2011, 2012 to go buy some silver, it was like every dealership where I live was like, sorry, we have no Silver Eagles. Now that eBay and some other places have some more dealers, there's probably a little bit better supply out there. But I'm telling you, once we break 40, Charlotte, I mean, you're going to see supply, really, really go away quickly on the retail side. And then, you're going to see a FOMO move to 50 at some point by next year is sort of our recommendation there. So with that backdrop said, we've been talking about Aftermath Silver on your show, gosh, since 14 cents US. It's trading at 60 cents US right now. I mean, we've made people a lot of money in that stock. It was a position for us, about a percent when you and I met a few years ago. Now it's 3.5% of our portfolio. A lot of that's through just buying and holding, and adding on crazy dips. But you're not going to get crazy dips in Aftermath any longer, I don't think. And the reason is twofold. One is that Eric Sprott came in with a $15 million check about 10 months ago into the company, and that cashes them up to where they didn't have to do a dilutive financing this year. And then secondly, their manganese is real, and that was also shown to the market last year. But what's interesting about the junior market, Charlotte, is that sometimes news takes weeks, if not months, to get out there. It's crazy, right? It's like they put out this news. It was game changing for them. They thought they were going to have an immediate reaction to that news. And it really wasn't an immediate reaction. It was sort of a bump up and then a move down, kind of a sideways move. And then it took off. But like it even took Eric, I think, a while to understand like the significance of 99.9% battery grade manganese, because it's really important. If it were lower, it wouldn't be that valuable, but it's not. And so that is another future revenue stream for the company. Also, we'll talk about copper, I'm sure, at some point today, but they have a lot of copper too, and that gets overlooked. So silver, copper, manganese, I mean, really, really good mix of metals there for Aftermath. That's AAGFF and AAG in Canada. The other one I'll mention to you is one we mentioned, I think 2 or 3 times ago, which is Triumph Gold. I found that through my own research probably about 8 or 9 months ago, and cold called the CEO, John Anderson, and just asked about his news flow because the news wasn't populating on my screen from the last year or two. And John said, John, we just mothballed the whole marketing thing because drill results weren't getting loved by investors, and we didn't want to spend money and blow up our share structure. And I thought that was a really great answer because a lot of people just keep doing the same thing over and over again and expected different results. And John actually stepped away from the project temporarily and now is going at it much, much more aggressively, which I think is being missed by the market. And what do I mean by that? Well, when you look at their gold project, which is in the Yukon, which is a historic, place for gold production, they have tungsten on their gold property, and it's pretty significant. I can't remember exactly the numbers, but when I heard them, I was like, wow, this is being missed by the market and clearly not factored into the valuation of the company just yet, which is always something we love as a value manager, right? The other thing that John did is he's acquired a Utah-based silver project for $150,000, and he gave the owner 1 million shares. So this is someone who probably didn't want to move that project forward themselves, had a relationship with John. John got a great deal, and as a shareholder, now you can pivot it from gold to silver, possibly tungsten. I mean, there's a lot of exciting things in a 16.5 cent stock there. That one's TIGCF and TIG in Canada.
Great updates there as well. And I know we have to keep moving, but I've got a small follow-up question there, because when I see companies pivoting and doing something different, adding a different metal to their portfolio, maybe I find it a little bit tricky to understand if they are adding value or if they don't know what they're doing and they're bringing in something else that they might not have experience with. So can you tell me how you look at it and determine the difference?
That's a great question. Generally, I just pick up the phone and call the CEO and ask them or CFO. I don't really like talking to investor relations because they sometimes will just say whatever is the party line. I want to hear it from someone who has skin in the game, that has real money at risk, right? And say, okay, this is the reason we're now talking about this. For example, when Polymetallic is the new name, PNPNF in the States, PNPN in Canada. Terry, when we first met through Eric Sprott, probably I guess October of 2023, they were a nickel company. Their name was Power Nickel. They talked about nickel all the time. But then in 2024, he started to hit these massive copper holes. And in those holes, you also had platinum as an element. So we think of that company now not as a nickel company. We think of them as a polymetallic deposit at NISC in Canada. Great part of Canada to do business in. Nickel, we think, is completely undervalued as a commodity. But now copper is not undervalued anymore. It's making all-time highs just last week. And you've got platinum, which is just ripping right now. So I don't know. We've been buying a little bit more of Polymetallic here at 80 to 81 cents US. It's trading at 83 cents right now, so not very far off at all. We think it's worth well over $1. I mean, as a value manager, you have to buy dips. if you look at the chart, that chart ran much, much higher in the last few months than it is now. And what's interesting to me is that like they raised $50 million from the likes of Rob McEwen, Robert Friedland, and Ivanhoe, like serious people coming into the stock. That should give investors more comfort, not like a reason to sell, So we look at disconnects like that and say, wow, they have the cash to drill. They're doing what they should be doing. And yeah, that was done through a phone call, Charlotte, to really ask Terry those kind of questions. So, I totally understand what you're saying, because like in a hot market, people are going to start saying, oh, we have tungsten, right? Oh, we have antimony on our project. And we just saw that with America's Gold and Silver. In fact, USAS at around 57, 58 cents, we almost doubled our position because they came out and said we have like 90% antimony on our project. And I was like, holy cow, like this is not just gold and silver anymore. This is antimony, as well, possibly. And the stock has gone from 57 cents to $1. And a lot of that is because, rare earths, antimony, tungsten, these are things that investors are starting to look for as keywords now.
Right. Okay. So you got to be picking up the phone. I think that helps me understand your process a lot more. And this gives us a nice entry point into platinum. That's another one that I wanted to bring up today. As you mentioned, the price has really been going, and it's kind of like silver, where it was pretty, well, maybe not exactly platinum, pretty flat for the last few years. So are you seeing this price rise as something that is going to continue? And do you have anything else to say on how you are getting exposure to that?
Sure. So I used to write on platinum and palladium for Sprott back in the dark ages. I think what's happened is that platinum and palladium and nickel, that group has been under pressure because of Russia. Russia produces a lot of those three metals. And what's happening is, they don't have anyone handing them checks, right? They're funding this war effort on their own. And they have to sell things that they have in surplus to fund the war effort. That's been nickel, platinum, and palladium in our view. I know that platinum, when they had their annual meeting, like they had a big like symposium or something a few months back, like was talking about these massive supply shortages. That probably started the buying right there, and it really just fed on itself to this point. Or we've got some handicapping going on that with Trump in office, he's going to get Putin to come to some type of agreement with Ukraine. That could be what you're seeing is sort of like a gaming, before any type of truce or deal is done. That's risky, when you're investing with like this, we don't do that. So we're happy that platinum and palladium are up. We have exposure to things there like Stillwater. We've talked on your show about that stock before, PGEZF in the States. PGE in Canada. They're doing a great job on all fronts. Their stock has responded extremely well this year to the move in things like copper, platinum, palladium. But they just did a financing, right? So as an investor, you have to look at it and say, okay, I love this stock as it was moving from 8 cents to 22 cents. Now it's at 16. So am I going to see a break back to 8, where I can really buy the heck out of it? No, you're not. You're in a bull market now. Like you can't look back at last year's prices and think that you're going to get last year's prices. That's just my opinion. But I feel like too many people are cheap and they don't like raise their bids, right? You have to raise your bids in a hot market. And that sucks as a value manager to do, trust me. But I have to do it, right? Because like I know that with the bottom is in on many of these stocks. And something like Stillwater has a partner in Glencore, where Glencore has 15% of the float. And that is cool because Glencore is a top 3 commodities player, but it's also cool that they don't have 30%, where they have, a real like stronghold on the company. They are a huge partner in the company, but they don't run the show, right? So we love that as investors to see a partner that gets it, but isn't, dominating the conversation all the time. And so this money they're raising right now will allow them to drill Charlotte, and that's going to be huge because they haven't drilled in months. So in a hot market, when you have cash and are able to drill, that's the time to buy before those results come out.
Right. Take advantage of what's going on right now. All right, I'm going to keep moving. There's so many metals that are on the move right now, so we've got a lot to get through. And the last one I want to bring up is copper. So copper was really, the price was on fire last week, and we had the copper tariff news out of the US. So
Yep.
I have typically heard about copper as a longer term play, and I'm wondering if this situation changes it for you. Does it move the copper story forward? And if you want to talk about how you're getting exposure, that would be great as well.
Sure. Yeah, we bought some physical copper 2 years ago. That's, it's a small, like one a quarter of a percent or something of our portfolio. You can buy it easy as a client through the ETF CPER. That's the tracker for the copper price. But really, I think copper is going. We've been saying for years now that it's going to do well. I've been fortunate enough to work with some companies on the consulting side that have done extremely well for clients, and I think that this is one of those times where you're going to see people put money into copper stocks and be very, very pleased a year or two from now. So I think this rally is real, to answer the question. I do think that a retracement below $5 a pound would not surprise me at all, because we've broken $5 a couple of times now, only to see it go right back, right? So we just made an all-time high last week. Let's hope that we make a higher low on the chart and we don't break 5 to the downside. That would be detrimental, I think, to a lot of equities. But let's assume that we're going to hold up this time. Then there's a couple of names that are still, I think, a good value in the junior market. Metallic Minerals, I just spoke to yesterday. That ticker is MMG in Canada, and it's MMNGF in the States. I've known Greg and Scott for about 3 years now. I've tracked the stock. We own a small percentage in it, but we're going to be owning a bigger percentage in it because, just like Stillwater, they're going through a financing, Charlotte, right? When you're not a shareholder of something already, this is an opportunity to buy something cheaply that was already, moving, and they basically had to take a step back to finance and to, focus on raising some money for their 2 projects. One of their projects is 9.5% owned by Newmont, NEM. And that really got my attention originally because I'm a big Newmont, shareholder and fan. And when Newmont makes a decision to invest in a company, even if it's slightly under 10%, it's a nice endorsement. I mean, they don't do this with hundreds of companies. Also, I love their U.S. exposure in Colorado. La Plata is an interesting deposit. And the stock overall, as we were just talking about, with multiple ways to win, you've got silver and copper as the 2 dominant metals in this company. And so silver breaking out, copper breaking out, yet the stock is trending sideways. I mean, that's when you buy a stock, because eventually a rising tide will lift all ships. And this stock has, some upside potential here. Another one that we just started to buy 2-3 weeks ago was Giant Mining. That one is BFGFF in the States, BFG in Canada. Very regular news, like for a junior, that they're coming out with news, it seems like every 2 weeks. And companies like that, I remember, it's true pretty much as we speak, but you and I both know Terry Lynch at Paramount, and he does that. He puts out news every month, no matter what. Like, he's trying to get people as shareholders engaged and have them focused. And I feel the same of Giant. Like, they're really shareholder friendly in that they're constantly updating them on every single hole that they drill. So they still have a couple of holes to put out there. The first couple that they've released have been really good, and they're in Nevada, so a neighboring state to me. And I think everything U.S. right now is going to catch a more of a bid than people think as we move forward. This Trump EO, the executive order that he put out in March, is real. The follow-up he had in April is real. Like, those were your indications as an investor to start overweighting U.S. projects like Giants.
Good updates on copper. Nice to go into that. And before I let you go, I want to bring up a couple of reader comments from the last interview. So we had requests for updates on two companies. One was Paramount Gold Nevada, and the other was Guanajuato Silver. So any points you would note there?
Yeah, I'm pretty good friends with Rachel Goldman, who runs Paramount, PZG. The name sounds like they have their lead project in Nevada, but it's actually their secondary project. So their lead project is in Oregon. And when people hear Oregon, they're like, whoa, like, Portland. No, this is the rural part of Oregon, all the way out, like hundreds of, it's not even close. So there's not a risk of getting shut down because of proximity in our view. It's literally like the permitting process just takes way long in everything we do with mining, right? So the cool thing about PZG is they just put out news a couple of days ago saying that their permitting process would probably be accelerated, and the stock popped and then just came right back down. It's unbelievable. I think this is just July and August kind of trading right here, Charlotte, where there's not a ton of follow through. If that same news came out in a hot month like January or September, I think it would have gotten a lot more traction. Regardless, 3 or 4 projects, all in the U.S. Rachel's doing a good job of leading the company, and the stock's responded under her leadership this year. So we still own that. Guanajuato Silver, we still own as well. I just, in fact, did a panel with James 2 months ago at one of my conferences. James does a tremendous job of analyzing the silver market, and has a lot of conviction. And I love that. In a hot market, you want a leader that's going for it. And James has 4 producing silver projects. I mean, that's a lot of work. He's got a deep team, and I wish them the best. I mean, that is a stock you'd love to see win, just based on how much work they've put into everything. But that doesn't mean it goes up, right? You have to do the homework. The negative on the stock is that the costs that they have in terms of all-in sustaining costs have traditionally been higher than some silver producers. But what you have to understand is that at $30 silver, when you're producing at $24 silver, that's not a lot of margin, right? But now you're at $37.50 as we record this, and you're producing. So that margin has gone up $7.50 per ounce. That's a big deal. And it's reflected a little bit in the share price. I mean, the stock's up about 30% in the last 4 or 5 weeks. But that's what people don't understand, is that if silver goes to 40 or 45, this thing's going to fly. I mean, they are in a really good position. So that's one we also still own.
Well, thank you for going into those ones. And I will let you go unless you had any final thoughts that you would leave investors with.
Just looking at some of the comments myself, it's not just your show, it's all of the shows that I do. It's like people want to harp on the negative. I think that's really interesting in our sector, right? It's like we're up 61.1% through the first 6 months of this year. I'm very proud of that. It takes a lot of work to do that, and to do it with a lower risk than, say, GDXJ, right? Because we're carrying about a 10 to 12% cash balance while we're producing those returns. So, it's like, if you want to complain, go for it, but sign up for a service of mine, sign up for a service of someone's, and get some guidance, right? Rather than complain about it. This is the time to invest money in our sector. That's it, plain and simple, right? You have to find a way to partner with someone to guide you through the difficult times. If you have questions, you need to pay for it. If I have a question legally, my attorney's not going to say, sure, John, we can talk for an hour for free, right? It's just, that's life. You have to pay for stuff. And so it's kind of like a frustrating thing for me, as you could probably tell, where I get approached a lot at conferences and stuff, and I'm expected to pontificate on stocks. It's like, this is a lot of work. This stuff doesn't come naturally. I spend hours every weekend researching stuff. So, I guess the message is, check out our website, fenneckconsulting.com, check out the performance, check out the services we have, and, shoot me an email. I'm happy to respond and see if there's a fit.
All right. Well, I think that is a nice place to wrap it up. I'm sure we'll have you back soon to go over what's going on in these sectors. Thank you so much for all the updates.
My pleasure. Thanks a lot, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is John Feneck with VanEck Consulting.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.